All right, can you guys hear me okay? I'm going to zoom in a lot here. It looks like on your end the video is not too good. Yeah, SF, I'm not sure why there's two rooms. I think the first one didn't connect correctly, so it might just be that way. But this is the one that I just sent you that's obviously not pending is the correct room. All right, so I'm going to go ahead and get started here. Just know there is a slight delay, at least on my side. So if I don't respond right away, it's because I probably didn't see your actual comment or question. But I will respond the best I can as quick as I can. So basically what we're going to talk about tonight is how to find key daily support and resistance lines. So I use the daily time frame mainly to do this. It's just what works for me. So basically, obviously we'll start with the basics and we'll just go super easy here, and then we'll just kind of work our way through it. If you have any questions throughout this video, mostly it'll be easier for you guys to comment on YouTube. That pops up immediately for me, but if you have other comments, you can put them in the Talk to DD, and I see those right now too. I have Discord up in the background. But mostly what we're looking for here is support. So a support line is obviously a price area that price action stops at before it moves back up. So here would be an example of a support line, 390.1. So you see price action was going up, and then we had to come back down, and then we found support right here at 390.1. So obviously resistance line is the exact opposite. So you see we were going up here in price action, and then we stop right here at 401.2. So how do I find my level? So we're going to zoom out here, and you can see how there is just tons and tons and tons of levels. I don't have all the data up here anymore. I used to have it, but my charts got messed up a long time ago, so I lost a lot of my data. But as we get up in this range, whatever we finally do, I'll go back and kind of add some in. So what we're looking for, and this is how I do it. Now, everybody does it a little differently. WB, yes, those are all established support and resistance lines, the dark black ones you're seeing right here. And then these channels, the gray, red, green, purple, gray, there's a blue one down here. These are, which I'll get to that later on in the video, are my key levels, pivot areas. So I'll talk about that later once we talk about how I find my lines, and then I'll talk about why these channels are highlighted, the horizontal ones. So some people prefer to use the candle wick. So that would be right here, which is the top of the candle. For me, when I'm doing my resistance and support lines, I use the candle bodies. So that's the actual filled out wider part you see right here. Yes, this will be uploaded later. I'm recording the video on my own app, and then YouTube should record it and upload it too. So the reason I use candle bodies versus wicks for support and resistance lines is this is where the majority of the price action happened and the most important price action happened. So an example of why we would use the candle body instead of the wick is right here. So this is back in September. So you see we had this nice move down right here. We came in, and then we had a nice double bottom. So right here, about 390.1, which is that key level that I am talking about right here still. If we would have used the wick, we would have a channel support at about 388.4. However, if we look at the bodies, you can see that that support is actually right here at 390.1. Now, of course, there's going to be a little bit of room, like wiggle room, just because you're talking about a macro time frame with a micro level. And then you can see right here, so if we didn't use key 390.1 support right here, when we went up and we came back down here, you would have been looking for us to go all the way down to the actual 388.4 level right here, but we never got there. We never went down to 388.8. However, if we use the candle body at the 390.1, you can see we clearly landed on the channel here. Now, mind you, this would have been a great time to play calls because we landed on the channel resistance line right here, or sorry, channel support line here. So you would assume a bounce up, especially like right here. However, we had a nice push down here, and this was around CPI time. So this was actually September's CPI. So we had a massive push down, kind of a small doji day, another push down, and then we were pushing down as we were getting into FOMOC. So that's why we broke through that support line. So, like I said, the main thing we're looking for here, and we'll just kind of zoom in here to, this is the most recent price action on SPY. So what I'm looking for is, I'm looking for a solid spot where the candle body either stops or ends. So for here, so going back to these ones right here, so on the 10th, so the resistance line would have been right here at 394.6 at that candle body. So if we actually, we'll go back, we'll move this line up to here where it would have been before, and we'll get rid of this one for now. So when we had this one, we broke through, we had a resistance. So then the next day, we went over it, and our candle body closed over it, and we closed over that support line. So that resistance line just became a support line because we closed, the candle itself closed over it, and the whole body closed over it. So you can see how this support line became very important for those next 3 days. So when I put these support lines on my 15-minute chart, that's what these big purple lines are here. So when we had the Friday come in, we held that. So then Monday came in. We had a nice breakdown. We almost got to that 394.8 previous resistance, now support line, and we held. Next day, same thing. We pushed up, and we established that 401.2 is resistance now. And then we came back down, and look where our wick ended. It ended right there at that support line. Now, of course, the hard thing about this is when we go to the 15-minute time frame. So I use these daily levels right here for our 15-minute level-to-level plays, really. So you can see here, 394.2 was, for Friday, a very key support line. You can see we came through and we did break down here. So this is where it gets tricky, because if we break through that support line, that should hint that we're going down to the next level. But it's not always that simple. We have to make sure that we have the volume and just the overall technicals to get to that spot. So here, though, you can see we came down in the morning and we did bounce off that level, and then we came back up, and look where we touched. Right there, perfectly at 396. I mean, we perfectly touched it and smacked right off it within a penny, 395.99. And then we came back down. So same thing, end of day, we pushed up, and then we fell short, just short of it, before we finally pushed through, and then our last candle held right on it. So the reason I'm looking for these key levels here is because I want to know where price action has spent the most time, and I want to know where price action has bounced and where price action has rejected the most. So for right here, so this, I said I moved this line up a little bit. So you can see these 4 candles, 1, 2, 3, 4 candles all held right above 394.8. So this previous resistance became very, very strong and very important support. So we then broke through, this was on Thursday, that support line. And so now that we had broken through that support line, where are we going to look for next? Well, we're going to look for our next support line. And that's where this 390.2, 390.1 support area came in. So when we go to push back up, which was on Friday, we're looking for the same thing. We're looking, okay, where are we possibly going to reject that? Where are we possibly, if we fail a breakout, going to come back down to? So that's where this 394.8 level is actually going to get moved back down to actually 394.3 now. And why is it getting moved here? Is because we used the most recent price action. So yes, there was a lot of price action right here, and that 394.8 was a very key level. However, we have to use the most recent price action. But we also have to use the most popular price action. So this is where it gets complicated. And actually this week is not a great week. And I'll go back to a further week to show you kind of a different perspective on it. And we'll go look at a different chart too later. But This week is hard because we had such small movement and such erratic movement, really, that the support and resistance lines are very kind of intertwined, and they really usually are a little more playing nicely. But so here on Friday, I really could move this resistance line here to 397.8. However, the reason I'm keeping mine at 398.5 is that we had this breakout here, and that's where we hard rejected. So that was key resistance. And then we rejected it again here, and then we did break out here, but we tried to turn it into support, but the next day we lost it, and we have not touched it since. So that means there is 2 times that this line was established. So I will take a support or resistance that has been established twice versus 1 time. So that's kind of where this level right here, while I'm actually going to use the 394.3 here, I could go back up and use right around this 394.8, but it's within reason that I know this level is just a key level. I'm looking at comments now. It says, is there a percentage point you look for if a candle closes below or above a key support? Meaning if a candle closes 0.5 or 1% under or above a support, does that give you confidence in future price? Not really. So I'll talk about, I'm guessing you're meaning like once we break resistance, is there a certain amount of the candle that has to break through the resistance or support? There's not a percentage or a certain amount of the candle body. For me, what I say is a wick is a hint, a candle body is an actual confirmed breakthrough. So let's look at this level right here. So this is back on November 8th. So you can see, so this was 2 days before CPI for November. So you can see we had 382.1 as a resistance line because of right here on October 26th. So here we broke up. We have this massive wick up here, but we didn't break through. We never closed over the actual resistance line with the candle body. So for me, that is a failed breakout, and especially with these goofy candles we had with a nice doji here, this is a rejection. This is a rejection at a resistance line, and that should signal the downside, which we did get here. Now, granted, I would have expected us to hold 378. However, we did come lower. But for me, there really isn't an actual like percentage or, okay, the candle body was this far over. I just look for if it broke through or broke not. So this is a great example of a confirmed breakout for me. So here we tried to break out, and we dead tracked right into that 390.1 resistance. Hit it and immediately fell. So this is a confirmed breakthrough major resistance. We came through, and our whole candle body almost closed over this. Now it could have been like right here. It could have closed right here, and I would still consider that a breakout. So we break through with the candle body. As long as the candle body is closed over that resistance line, then it is a breakthrough. There's a comment. Do you usually wait for a retest and rejection of previous support resistance line of a breakthrough before confirming enough to take the breakthrough? So yes and no. I do always look for a back test. So that's kind of what I was looking for here. I was expecting it actually kind of closer to here because this was CPI. So we had a massive breakout here, and I was expecting a cool off, and I was expecting us at some point to come back and reconfirm 390.1. I didn't think it would take this long to get there, but we did. So yes, I do look for a backfill, but for me, it doesn't really matter because I'm not usually playing more than intraday. So when I play options right now in this market, at least, because you can see how erratic our market is. I mean, this is straight up and down, up and down, up and down, up and down. There's very little time that we're pushing through. So for me, the more important thing is on the 15-minute chart here. So let's take here. So we had a breakdown. We hit 390.1, and we're holding this here. So this is a great consolidation right here at key support. So for me, I'm looking for a push through. So I would have taken a call here, excuse me, and then go back through. So once we hold this support, I don't really necessarily immediately look for a back test of the support. If it holds, it pushes through. I have never heard of speed lines, so no, I do not use speed lines. The EMAs I use are for my daily chart. The black is an 8 EMA, the blue is a 20 EMA, yellow is 50 EMA, green is 100 EMA, and then red up here is the 200 EMA. That's just what I use personally on the daily chart. The only one I would maybe get rid of is the 50, but they're all nice to have. They all show kind of different things. So I want to talk about these channels here, and then I'll take any more questions you guys have. So we're going to zoom out for this. So the way I establish what I call these I call them key channels, so you'll hear me call like the channel resistance or the channel support line, is what I'm doing is I'm looking at previous price action. So this is all of 2022 pretty much right here. You can see we break down and we find key levels and we kind of pin to them. So let's go back, we can go all the way back here and we'll work through the year. So this is back in January and February. So you can see we came down and then we kind of held this level right here, 429.9. And then we held really nice, 5 big wicks right here, and they pushed up. And then right here, we hit resistance, and where do we double top? Right here, 1, 2, and then we even had a third wick right there. So this right here, 457.6, this would be is a key resistance line. And to get back through this resistance line is gonna take a lot of effort. You can see we even had a back test after we broke through, once with the candle wick right here, or sorry, with the candle body, and another one with the candle wick. And then we come back down here, we broke down, we came back up. Look at this. We had a big gap over it, we held it, we attempted to hold it, and then we lost it. So then we had a candle body rejecting right there at that 357.6, came back down, failed to break through, touched it and rejected and came down. So that establishes a very, very key resistance. That means that there's a lot of price action right here. Same thing right here. We had 1, 2, 3, 4 candles on support right here. A fifth if you go back here. And then we come back down, we touch it, rejected. 1, 2, 3. Come through here, we had 3 candles sitting right on the same line. 1, 2, 3, 4 more candles. 1, 2 more candles. So basically what I'm doing with these levels is I'm just looking for a spot that on a breakout or a breakdown of where we're naturally, I don't know how to get rid of, if I can get rid of these comments or not about whoever that person is, but basically what I'm doing is I'm just looking for areas of consolidation. So down here is a great example of that. We had this breakdown, we found support right here around that 356.3, and then we found resistance right here around 370.5. So we're just going to keep bouncing in this area. So what I'm looking for is a confirmed breakout, like right here. Nice old candle body over this. Confirmed breakout. So then I'm looking for my next level. So my next level is 370.8, or sorry, 378 basically. Looking for that, look at that. This is what I'm talking about when I say it doesn't have to be a massive candle body over. It can just be a small one like this. So I'm looking for my next upside. So from here, when we broke 378, I was immediately looking for 390.2, 390.1. So we pushed through. Look at that massive rejection right at my resistance line. Okay, so we rejected. What's next? We play puts because we're looking for a back test of support. So first support was going to be that 378. We lost that. Okay, so now we're looking for our next support. 370.6. You see, we held it with the doji. We wicked through it, but we held it. So that tells me we were going to bounce. So then we're just playing, and then this just helps us with not only intraday to have a sense of direction, but it also helps us with playing a longer term put or call. So here on Thursday, I called out at night at end of day. I said, let's take overnight swing calls because we bounced and we held this support line here. So the next thing we should do is push up. And if you played calls with me on Thursday night into Friday, you got a nice win when we opened up. It was about 40% on a 5 DTE. I know some of you guys played the zeros, and I think it was like a 200% win or something like that. It says, do you treat data for your future consideration when the market may react in a big way towards an event or news? Yes. So that's a great question because I get that a lot. And you will see on days of like CPI, FOMC, things like that, I don't usually do a pre-market update, especially CPI, because what's going to happen is, so let's take actual CPI. I'm not going to use November's because that was an abnormal day. Let's see, where was October's or September's CPI? So September's CPI. So what I'm looking for is interaction with key levels. So here we have the day before CPI. So on this day right here, what I was looking for was, okay, are we going to break through 405.2 or are we going to push up and are we going to touch 419.5? So while I don't know which way we're going to go, what I'm looking for on huge event days are major support areas. So, okay, we broke through 405.3, so now we're going to be pushing down. So the next thing I'm looking for is, okay, we're going to go back down to 390 then. So that's kind of what I do on the big event days. You know, here was Jackson Hole. Jackson Hole was kind of wild because we actually had established we had this pre-established 419.5 resistance, and on Jackson Hole we pushed up, rejected, and we touched down at 405.3 support all in one day. This was a massive move in a day. There's a couple times that we do this where we touch, you know, support to resistance in one day. Kind of same thing. This was FOMOC. We pushed up. We almost got to 390.1, but then we fell all the way through here at 378. So for me, this breakthrough here tells me that we need to be playing puts. And if we played puts, you would have got rewarded. Is there any way you can share your chart with all the lines currently on it? I'd love to study it more. If you go in the daily chat, it is pinned, my charts for my 15-minute, which do have the lines on it. I'm not sure if my daily's pinned in there or not. Someone can comment, let me know later, and I can let you guys know. Why are my levels different colors? It's just to keep it easy on the eyes. I think my futures is not. Yeah, futures I just use two colors just because it's what makes it look nice on my eyes. It just shows more separation, because if I were to take this one right here and make it the actual gray and black to match the same color, it doesn't make it as clear that there's a big difference in the channel here. So if you go back to the actual color, you can see, oh wow, okay, this is the channel here, and then there's another channel, and then there's another channel. So I just use the colors just to make it easy on the eyes and that make it clear that there is actual different levels that we're looking at and different consolidation channels. So if there's no other questions, I'm just going to pull up Microsoft real quick, a random chart that I don't have anything on. And I'm just going to show you an example of me going through. Thank you for letting me know, Russell, that it's pinned. I'm just going to go through and just kind of show you what I would do if I was pulling up a chart and I wanted to find some key levels and some key things that might be happening. So I always use my extend a line. So basically, we're just finding a spot where price action stops. So this is perfect right here. So on November 3rd, we had a bottom. So you take it, you find the bottom of the candle, make the line as parallel as you can, and there we go. This is now support. So if we're going to see Microsoft, which actually kind of has like a nice inverse coming up here, so this might come up, pop here, and we might actually see Microsoft push back down here to 220. But what we're looking for here is, okay, we found support. Now let's look for the major resistance. Okay, so we got to look for the biggest level. There it is, right there. Put it at the top wick. So that'd be 251.5. And you can see why this is a big resistance line, because look at this. We had almost touch of it. We popped up. We fell just short. We wicked over it. And look at that. We back tested this level with a wick. We rejected it. Came down. We had three rejections before we dropped. Came up. Hard rejection with the candle body. This is a big right here. If you knew this was here, this is a massive, great opportunity for a put play. And then we come down, bounce back up, didn't quite get to it. So for Microsoft, until we break through and close a candle body over 251, I would not be taking calls long term on it. So then we can find, so now we got our two major levels. So this would be like the channel. So we could even do that to make it look nicer. So let's do a channel here instead. Okay, cool. So this is our key channel right now. This is where we're trending in. Okay, so let's find intra-channel supports and the resistances. So let's find some spots of major price action. So what we're doing is you're looking for spots, if you go back, that there's more than just one. Yes, I will use more than like just one spot. Like if this was here and it is the most recent, I would use this as my resistance line right now. But the nice thing about this is that if you look, it actually had one, two, really three rejections at it right there. So let's find another one. So we have this one. So this was a big gap right here. So we would use this as our support, a next support line down, which you see we had this held right there. And you go back and there's a lot of price action right here. This 235.6 level has a lot of price action. So then we just keep adding lines and we just go down and look. Okay, so we had some resistance there. We can go down here. Okay, so this was the last bottom. Oh, look at that. There's two candle wicks that rejected perfectly off that. So we're just finding like major areas of support and resistance. Just kind of looking for areas where we're going to go through, go down, kind of like that. What do you mean by how many months are on this chart? Oh, I see. So this is the daily chart for for Microsoft, and I'm zoomed out to see about September to December, so about 4 months total on the chart. This is, if you zoom out, you can see all of it, yes, but I'm zoomed in about 2 to 3 months at a time, just to make it easier to see the candle wicks and bodies, but not be so zoomed in I can't tell what's happening. But that's pretty much it. That's how I find my supports and resistances. And you can kind of look at Tesla when I'm talking about these key channel areas. Same thing. You're just looking for an area that there's been a ton of price action. So this is one that people say, oh, you can't trade Tesla because, it's erratic. It is, but it's not at the same time. I mean, look at this. This is very uniform. We came down, we find support. We go up, we find the resistance. Oh, let's go find the support again. Okay, let's go find resistance again. Oh, we broke through. Just kidding. Now we're going back down. Okay, cool. So let's go find this support here. This one on Friday, I called out. That was a big, big one. I said, okay, right here, we have a nice bear flag. We would reject it at key resistance at 195, 196 really. We should be looking for 177.4. And had you played that on Tesla when I called it out, you would have had a very nice win. And I even played calls off 177.4 on Tesla. I said, okay, you know what? We're double bottoming him off a previous known support. We should push up. So I did play calls for Monday too on Tesla because I do expect this to push us up. All right, well, if there's no other questions, that is about it. This kind of just gives you guys a quick summary about how you guys can kind of find your support and resistance lines. The biggest thing, honestly, is just trial and error. You just got to try to find what works for you and, more importantly, what doesn't work. So if you threw this resistance line on here, right here at 398.6, and say, we fall short or something like that, and you're like, oh, okay, well, why didn't we touch that? Well, let's adjust it and find out why. You could have had your support line right here, and you're like, well, we didn't come down and touch support. Why? I always want to know why I was wrong. I don't always care so much about why I was right. I just want to know why I was wrong. So a lot of this is just trial and error. I mean, this is how I've learned over time. I mean, years ago, I started charting Bitcoin, and Bitcoin was amazing because it's moving 24/7, always moving. It never has a day off. Log scale or linear scale for trend lines. What do you mean by that? But yeah, so I started with Bitcoin. So anybody that's interested in learning about really any sort of trend line, support, resistance, just drawing channels, things like that, I recommend crypto because it's moving 24/7. And yes, it's erratic and you have these crazy, 10%, 25% drops and things like that, but it's still uniform. You still can find patterns. I mean, I used to chart Bitcoin back here when, gosh, where are we at here? Back in 2020 and stuff, where we would have random days and, people like, oh, there's no top. It's going to keep going straight up to, 60K right here. But you can find areas where, it's going to reject though. There's going to be a back test and you kind of push up. For the logarithmic scale versus linear scale on Thinkorswim, you can view the chart in logarithmic scale, linear. I'm not really sure, to be completely honest. I've never seen that before. If you can send me a screenshot in the chat with like what you mean or an example, then I can kind of answer that better. But otherwise, I'm not really sure how to a good answer for that. But I'm going to go ahead and end this here, guys. I hope this was helpful. If you guys ever have any questions, just let me know. I'm always down to help, and we'll try to do some more videos here as the months go on and things like that. So if you guys have any other videos you would like to hear about, I would like to do one on actual trend lines now, not necessarily just support and resistance. This one was dedicated to support and resistance, but I would like to do a video on trend lines, like how I found this channel right here and how I found my rising wedge right here and things like that, and how I play those and don't play those. So drop me a comment if you are interested in something and you have an idea about something you think everybody would benefit video wise. Otherwise, I will see you guys